Hi friends, have a look at my screen and you will see that Union Bank of India Limited in last 1 year has given close to 135% returns. The stock was trading at roughly 40 rupees in August 2022 and has gone up to roughly 91 rupees right now. Have a look at also Indian Bank and you will see a very similar pattern. It has given in the last 1 year close to 118% returns. If you look at Punjab National Bank, that has given close to 86% returns. Also have a look at Bank of India Limited, that has given close to 81% return in last 1 year. Also have a look at Bank of Baroda Limited and you will see that in the last 1 year the stock has given close to 63% returns. And finally have a look at Canara Bank Limited, that has given close to 49% return in just last 1 year. There is one thing common in all 6 stocks, that is all 6 stocks belong to PSU banking sector. What has caused this rally in PSU banking sector in last 1 year, as well as what is potential for the further growth, is what we are going to learn in this video. Let us quickly understand what has caused this rally in last 1 year. There are 2 simple reasons. Let me quickly explain to you in 30 seconds. Reason number 1 is that Indian banks have been writing off NPAs. NPA simply means non-performing assets or bad loans. If you look at the data, you will see that in the last 5 years, Indian banking sector has written off roughly $129 billion. And just to put this in context, Pakistan's GDP in 2023 is likely to reach roughly $378 billion. So roughly 35% of Pakistan's GDP has been written off by our banking sector in just last 5 years. That is an extremely important data point for us to understand. And when banks clean up their financial books and write off the bad loans or NPAs, then what happens is that they are at a much comfortable place to land more and more money to the economy. As a result, they start to earn more net profit margins, and as a result, the share prices go up. Hopefully this explains you the macro environment, and this is going to continue in the short to medium term, at least next 2 years. Reason number 2 is Lok Sabha elections to be held in 2024. For right reasons or wrong reasons, central government of course is trying to push the infrastructure, roads, railways and so many projects into the economy. That is going to need a lot of money, and where is this money going to come? This money is going to come from the banking sector. Now comes the $1,000,000 question, that what are the PSU banking stocks that are likely to give us good returns in the next 1 to 2 years? For that, have a look at my screen and you will see that as on 30th of July, Economic Times published these 7 stocks that you see on my screen, and their recommendation was that these 7 stocks are likely to give you somewhere between 29 to 40% of upside in the next 1 to 2 years. Now, how do we decide that out of these 7 stocks which are quality stocks? Well, you do not worry, I have done the analysis for you that I am going to run you through. But before that, let me quickly warn you that some of these stocks might start to fall in the next 1 month because of the MCP's decision to increase the incremental cash reserve ratio. I did a comprehensive post on this on my member community. Please consider subscribing to my member community, because that is where I share the in-depth analysis on stocks, mutual funds, etc. Let us now analyze these 7 stocks on various critical important factors around the banking sector. So what you see on my screen is list of all the 7 stocks here. And just very quickly, I consider SBI as a giant market cap stock having a market cap of roughly 5 lakh crores, as well as PNB, Bank of Baroda, Union Bank of India, Canara Bank. These are all large cap stocks. And if you look at Indian Bank as well as Bank of India, these are 2 mid cap stocks. The first thing is that we are going to compare their CASA. What is CASA? Simply, it is the percentage of bank's deposit in the form of current account plus savings account. Higher the CASA, better it is, because that means that the bank has higher current and savings account, meaning that they are paying less money, less interest to the borrowers, while it is using that money to loan at a higher interest rate, therefore earning more and more money. So higher the CASA, better it is. What you will see right now is that SBI has the highest CASA among these 7 PSUs, and overall if you see that from March 29, all of these banks have improved their CASA except PNB, that has shown the negative growth when it comes to CASA, as well as Union Bank of India, that is showing some negative growth in CASA. That is not a good sign. Remaining all the banks have shown positive growth in CASA, and most importantly, if you see Indian Bank, it has shown roughly 20% improvement in CASA in the last 4 years, from 34% to roughly 42%, which is a great sign. The second criteria that we need to analyze these 7 banks is against the net interest margin. What is net interest margin? Let us say a bank is giving 7% of interest to its borrowers, people like you and me who are having FDs or term deposits or whatever, and able to lend this money at roughly 9% to its borrowers. Then what is going to happen is the bank has earned 2% of net interest margin, right? Now, if you look at these banks, you will notice that from March 2019, all the banks have improved their net interest margin. Right now, Indian Bank is showing the best net interest margin among these 7, followed by Bank of Baroda very closely, followed by SBI. But from an improvement perspective, if we see, then we will see that Union Bank of India has massively improved roughly by 24% in the last 4 years, followed by Bank of Baroda that has done almost 20 basis improvements. On number 3 is Indian Bank that is improved roughly by 14 basis point. Both CASA and net interest margin ultimately impacts the profitability of the banks, and let us now understand the net profit margins. So if you look at the net profit margins, Bank of Baroda as of March 2023 is showing the best net profit margins roughly 15.74, followed by SBI which is 15.12%. Also you will see that I am using the yearly figures here, so I am not using the last quarter results, because for me 1 or 2 quarters really do not matter. What really matters is in the last few years how the banks have improved and what is their current position year on year basis. Also if you look at from improvement perspective, SBI has done massive improvements in their net profit margin and stands out clearly from the crowd. You can see that on my screen. If you look at the return on equity, what we are going to see is that SBI has shown the best return on equity in March 2023, standing at 16.75%, while Canara Bank is at number 2 by 16% roughly, and Bank of Baroda at number 3 roughly 14%. You will also notice that some of these banks in March 2019 were actually showing negative return on equity and right now have started to show positive return on equity. That is why some of these bank share prices have gone up like crazy. So far, if you're finding this analysis useful, please hit the like button. With that, let us also look at their ROCE percentage, and you will see that right now Indian Bank is showing the best return on capital employed, followed by Canara Bank and Union Bank of India. You will also notice that almost all the banks have shown good growth in terms of the return on capital employed. So all of these banks have started to show positive return on capital employed. Now comes the last very 2 important parameters. One of them is gross NPAs, which is the gross bad debt. And if you look at these 7 banks, you will see that from SBI's perspective, it has the least gross NPAs right now as of March 2023. It is roughly 2.78%, followed by Bank of Baroda that has 3.79%, followed by Canara Bank which has 5.35%. As of March 2023, PNB has shown the worst gross NPAs, roughly 8.74%. And last but not the least, net NPAs, which is gross NPAs minus provisions. What you see quickly is that out of these 7 banks, SBI again stands at a very low NPA, net NPA, which is 0.67%, followed by Bank of Baroda at 0.89%. And at number 3, it is Indian Bank at 0.90%. Let me now quickly summarize for you. What you see on my screen is the various parameters on top and how these banks have performed in terms of if we rank them. And you will very quickly see that SBI to me stands out as ranked number 1 among these 7 banks because of very low levels of GNPA and NNPA, as well as improved CASA, net profit margins, NIM. So from a quality ranking perspective, I would consider SBI at number 1. And number 2, I would consider Bank of Baroda again because of extremely low GNPA, NNPA, as well as good net profit margins, net interest margins. So my pick will be number 2 is Bank of Baroda from a quality perspective. And rank number 3, I will go with Indian Bank, mainly because their net NPA is low or at the 3rd position, as well as they have given good return on capital employment, ROI is looking good, net profit margin is looking good, and their net interest margin is at number 1. So from that perspective, I will select Indian Bank at number 3 from a quality ranking perspective. Does it mean that we should go and invest our money in all 3 banks right now? Let us please also look at the valuation side of these banks. What you see on my screen is list of the 13 PSU banks, and I have used a very simple valuation technique here. What you see on my screen is I have taken PE minus sector PE, which is what is the stocks PE versus the sector PE, as well as PB versus the sector PB. And let us have a look at these. Out of these 3 banks that we chose from a quality perspective, number 1 SBI, Bank of Baroda and Indian Bank, let us understand whether these are undervalued from a PE and PB perspective. So for that, let us go ahead and have a look at Bank of Baroda. Bank of Baroda right now is at number 2 position from a PE minus sector PE perspective. From a valuation perspective, it is at number 2. It is the number 2 undervalued bank right now among these 13 stocks. Also from a PB perspective, it is undervalued right now because PB minus sector PB right now is showing me negative. From Indian banks perspective, it is at number 4 from a PE minus sector PE perspective. It is at minus 7.89, and from a PB minus sector PB perspective also it is showing me negative. That means it is undervalued. And State Bank of India right now from a PE minus sector B perspective is at number 5, as well as from a PB minus sector BB perspective, it is minus 0.97. So these three banks right now look to me quality banks, as well as they look to me undervalued from a PE and PB perspective. Please do not take this as a recommendation. What I've done is simply analyze these banks and presented the facts and figures to you from an unbiased perspective. Also consider joining my member community, because that is where I announce which stocks actually I am buying or selling. So you can consider joining my member community. Thirdly, I would highly recommend you to watch this video where I have analyzed the small cap banking stocks, and you will understand a lot about banking sector by watching this video. Also, please be aware of number of scams going on my name. Please understand, I will never ask you a single rupee or never send you a message on Telegram, WhatsApp, email, or whatever social media you use. You can also consider following me on Instagram, LinkedIn. You will find the links in my bio or in description. Let me know in the comments the topics you would like me to create videos on. I am always open to hear your comments and create videos that you would like me to. With that, I hope you enjoyed this video. I will see you in my next video. Until then, keep rocking.